Francisco, you nailed oil. You got your 90, 91 Brent as well. The trajectory seems to be to 100, and very clearly that's what Saudi wants, is a domestic reality. They have budget requirements, fiscal requirements domestically. Are we going to see a $100 barrel because Saudi wants it?
It's possible, Tom. I would say there's three things that have been moving oil prices over the course of the last 3-4 months. Supply, and supply. We've had Saudi Arabia cutting production for, as you know, close to a year now. And they started cutting in September of 2022 at around $95 a barrel on Brent. So clearly they want to have higher prices. They're trying to push the market there. What's new in the past few months is that Russia has finally started to align itself with Saudi Arabia and started to take production out. The Russians, after maximizing volume over price, over value for much of the past 12 months, they started to focus on price over volume. And that's a new development in Russia, I would say, in the last few months. And then also we've had a lot of refining issues, Tom. We've seen products, particularly diesel, leading the oil market higher. So those are the three main supply drivers.
One of the great things in Kaplan's book is the new linkage, not like 1986, but the new linkage between Saudi Arabia and China. Can China live with $100 a barrel oil?
Well, I think that the Saudis have always been very cautious about avoiding demand destruction episodes. And certainly, I think they will become cautious again if prices break through $100 a barrel, because as we saw last year with gas, with natural gas, if prices do get out of whack, you can lose a lot of demand. European natural gas demand from industry, remember, is lower today than it was at this time last year, with a 90% decline in prices. So you have to be careful what you wish for. If prices move up too fast, you can end up hurting consumption. And China today, as you know, is the world's largest oil importer by a mile, and is facing a pretty weak economic outlook ahead because of the real estate challenges and the trade war with the U.S. and, of course, the tech sector also being down. So I think China is not in a great economic position to begin with. So I think OPEC Plus will be careful as prices rise.